Good morning, everyone. Taking a nice drive to work this morning. Drive down the lake shore to get there. Doing some math last night using a few online calculators to figure out the best way to come out the best with the Volkswagen Buyback. So, did some math, made some assumptions, let you know how it's going to come out in my case, or to make the most financially. What I'm going to do is assume that you're buying a $250,000 house and you got it for about 4% interest. So if you bought it back in 2010 or so, I'm just estimating every situation is going to be slightly different. If you bought it back in 2010, interest rates were, I don't know, anywhere from 4.7 to 4. And if you bought it now, they're a little bit less. So you got to plug in your own numbers, do your own math to get exact figures. But I'm also assuming that you're going to have $25,000 for a car. You're going to use $1,000 down payment. If you get 0% down or 0% financing on that $25,000 car with a $1,000 down payment, so you're financing $24,000 plus tax. So with that, at 3% interest, you're going to be paying about $2,000 in interest on a 5-year loan. So taking that into consideration, I'm just using $2,000 in interest on your car loan. So depending on length of your car loan and stuff like that, that figure is going to be slightly off. But what I determined is you're better off financing your car if you can swing the payment in addition to your house payment. I'm assuming there's a few assumptions here, along with assuming that you own a house. So if you purchased that $250,000 house in September of 2015, that was when I purchased my house. I have a 15-year loan, so my interest rate's a little bit lower, but if I had a $250,000 house in 2015, put that $24,000 towards the house principal and pay off your car loan at minimum payments, it would save you $42,000 in interest after taking out the $2,000 in interest from the car loan. So it would also shave off about 47 months from your mortgage. So it would take you from, well, it depends how long you started your loan. So that's going to be different for everybody. So that'll save you $42,000. So that'll more than save you the new price of your car just by financing it. So had you bought your house back in 2010, I'm just assuming a few years ago, if you bought a new car around the same time, it would still save you quite a bit of money. But if you bought it in 2010, I just plugged in some numbers. It appears that you'll save around $31,000 after it's all said and done in interest, and that's making minimum payments on the house after that and minimum payments on your car loan. So that would save you 45 months off your loan. So you're not going to save quite as much in interest, but you'll still shave quite a bit of time off your loan. So my recommendation is if you can swing the extra $450 in car payment, depending on the car you're going to do, pay off your lump sum payment from VW towards your house. Even if your interest rate is slightly lower on your car loan, if you do the math, it'll probably still save you more money by putting the money off on your house, because of you're paying more interest up front in your house loan and stuff like that. If you're close to paying off your house, like I said, you got to run the numbers. It may not be as much of an advantage to you, but it should still save you money. So I would try that. In my situation, I only have a 180-month loan, so 15 years instead of 30. So my interest rate's like 3 1/8 or something like that. Went down a little bit since I purchased the house, but I'm not going to complain. It's still cheaper than 13% that my parents paid years ago. In my case, it's going to shave off, I think 39 months. So I'll still lose the same amount of months, but I'll only shave off about $7,000 in interest after the car loan. That's assuming I don't pay off any more extra on the house or on the car, which I guarantee I will. So I'll save a little bit more money than that in interest. But by getting the 15-year loan, I'm already saving, in in my case, like $30,000-$40,000 in interest over a 30-year conventional loan. So that's all I got for today. I'm run the math. I'll try to find some links to the calculators that I did. I assumed the payment would come in December with VW buying back the car right away. Obviously, you run the math. You might be beneficial to keep your car for 18 months, but I don't want to take the risk of potentially totaling out my car and having breakdown issues on my car, having to pay that, or if the car's totaled, having to deal with insurance and them not wanting to give me the $21,500 for my car. So run the numbers, but be sure to check into that on financing your car versus paying for it up front. It seems like a good idea, paying for a car 100% cash up front, but it may not be the best for you in the long run if you're looking 5-10 years down the road for saving you the most money. So if you get paid off, have no car loan, but if I finance the car, pay off the house faster, I'll have an extra $7,000 come the end of the house loan. So I'm going to do that. Should have a new car later this week, so I'll put out another video. So if this helped you out at all, I'll post the links in the description below for some of the calculators that I used. They may not be the best ones out there, but they work pretty nicely. So if you like the video, please give me a thumbs up. If you want to see some of the new videos once I get my new GTI in, hopefully later this week, please subscribe, come back. Thank you for watching. Have a great day.